CDS reflects a company's chances of default, the small changes in the credit perception of a company. Bonds do the same thing. Bonds are the fixed income assets that companies sell and they have to pay them back. CDS references bonds. They should trade basically almost on top of one another. There are times when CDS doesn't trade on top of the bonds. If all you're doing is watching CDS and all you're doing is watching an equity, you might be able to put them up on a screen and say, hey, they're trading pretty much in line with each other. Let's say CDS has widened 50 basis points, the equity sold down 3 points. Yeah, it looks about the same. But then when you look at the bonds themselves, maybe the bonds have rallied. So now you've got a situation where the CDS is trading at 250, the bond is trading at 150, and the equity has traded off with the CDS. Well, guess what? That CDS at some point or another is going to shrink the distance between what it's trading at and what the bond is trading at. Maybe the bond will widen to the CDS. Okay, fine. Maybe the CDS will tighten back to the bond. If the CDS tightens back to the bond, that equity investment is probably going to recapture a big deal of its recent sell-off. I'm not telling you which one's going to happen, but if that situation happens, you better have made a cognitive decision to say, the bond holders are wrong, there isn't liquidity in the bond, the pricing's wrong. Fine, the pricing on the bond is wrong. Doesn't happen to as often as people would like to believe, but okay, fine, the pricing on the bond's wrong. The CDS, though, historically has had a reputation of moving quicker because it's more liquid than the bond. So if the CDS blows out 100 basis points based on a rumor or based on maybe a little bit too much hype, a headline or something or other, well, CDS is probably going to march back towards the bond. And as that CDS marches back towards the bond, equity is probably going to rally back to where it was prior to the sell-off. Well, guess what? If you had shorted that equity based on a CDS movement or on some other issue, you might be caught holding the bag.